Hey everyone, checking in on Twitter, GoPro X, and CHK. Before I get into it, I'm going to be out of the country tomorrow through Tuesday, so the videos will cease to be for the first time for multiple days in a row in 2 years. But I'll be back to the normal routine on Wednesday. So looking at Twitter, we have an upper wick of resistance rejecting from the exponential resistance. We did see a nice day trade opportunity with the bull break of the inside bar breaking 1629 as the signal. Got 13 cents of upside, so a little bit of a scalp to be had there, but clearly the bulls are still struggling to gain momentum as we see this upper wick of profit taking before the close here today. So support, still looking down. We have the lows of each of the last 3 days as support: 1605, 1595, and 1591. And it's going to be up to the bulls to start forming some higher lows and higher highs. You can zoom in on the shorter term time frames like the hourly chart to get some more detail on the trend that the bulls are forming. But we have to see those higher lows and higher highs in order for the bulls to try and see this oversold bounce continue to play out. These exponential resistances will be a great guide as well, as long as they are resistance. The bears maintain control. You can see times in the past where it's driven the price to the downside, and then once the bulls turned it into support, we saw a nice little pop to the upside. So I use these exponential moving averages. When the price cannot get above them, it's a strong downtrend, and once we do see the price get above them, we see a bit of upside. So the weekly time frame, no sign of the bulls. That lower high and lower low clearly standing out. And when we do bounce, we will look for a short-term bounce and a bearish entry opportunity once we see the bulls tiring to the upside on that bounce. GoPro on the daily time frame, earnings came out. Nice reaction so far. Congrats to the bulls. And last I saw, we were trading in the low $9 range. So all depends on where we open tomorrow. And really, it all depends on where we trade in regular trading, because obviously it doesn't take as much volume to move the price here after hours. So if we can hold these gains at the open, that will be significant. So the 20-period 5-minute moving average support on gap ups is your guide. If you hold that in the first 10 minutes of trading, the bulls maintain full control. If you lose the 20-period 5-minute, you're going to see profit taking and gap filling back to the downside. So that's a very clear guide to use, and that will come in handy tomorrow for GoPro. So in terms of resistance, depending on where we open, I'm looking at 940, 975, and then 10 psychological is resistance. So we're going to break a ton of resistance levels. If we open up and get through the low $9 range, we're going to take out a couple months of resistance. We're going to turn this middle Bollinger Band into support on the weekly time frame for the first time in 2017, and we're going to see the potential start of a trend change if the bulls can maintain these gains that they are seeing after hours. So a very key resistance level is going to be 1110. We're not going to break that, in my opinion, anytime soon. We're going to have to see, some consolidation from the reaction and then some follow through to the upside. But if we get over 1110, if we get over 1110, there's a lot of room to the upside. That's the highest price we've seen in the last 9 months of trading or so. So that's a key level to be watching overall as well. X on the daily time frame, nice follow through from the bullish reversal candlestick, but same story as Twitter. Bulls could not hold on to those gains. We have an upper wick of profit taking, rejecting from the exponential resistance. So the break here occurred at the high of yesterday, 23, made it all the way up to 23.31. Another day trade opportunity, but not much follow through otherwise. So when we do see some more significant follow through, we will anticipate a lower high to form on this bounce. There is a little gap here at 24.72 to be watching, but we will look for a lower high to form and a potential bearish entry opportunity after a short-term bounce cooling off hourly oversold levels, which is occurring. So this is a potential bear flag leading to further downside. The bulls have to get over exponential resistance for this bounce to have any meaningful movement and power behind it. Weekly time frame, bearish reversal candlestick last week, seeing some further follow through this week. And it's not game over on this bounce on the weekly time frame. We still have these higher lows. I'm looking at 2067 and now 2238. The bulls want that to be our new higher low. So by no means is it, a complete disaster in terms of the daily chart and the reaction to earnings it is, but that provided a bit of a cushion. The fact that we had 2 gap up opens heading into earnings and the significant pullback after that, not as significant as it would have been, obviously, if we didn't see that upside action beforehand. So the bulls still have a chance for this weekly chart to see this bullish MACD cross follow through and to get over this middle Bollinger Band resistance, which is going to be right at about $24 next week. That will be a key level to be watching in the longer term as well. CHK, big bear follow through. So we have earnings reported now on CHK. Look at the closes at the low of the day. That's really all you need to be looking at in terms of momentum. That tells you that the bears are in full control, especially breaking the higher low pattern yesterday and now seeing the follow through. And we have increasing bear volume 3 days in a row. So no trend change on CHK. We got our first signal. Personally, I did not enter this trade, but there was enough indication that I would have if I was not doing other things in other positions. But that would have been one to obviously protect our losses. This was the first red flag. There's the bearish reversal spinning top that says heads up, consolidation is likely. The second day that we pulled back, no big red flags. The bulls bought the dip. We held the 50-day moving average support. The third day was the red flag, and that's because of the increase in bear volume and the close at the low of the day. That let us know, okay, this consolidation is now getting a bit more excessive, and we need to be cautious, and then we dumped from there. So definitely a little bit of a fake out, getting over weekly exponential resistances for the first time in months on the verge of a bullish MACD cross. That has been erased by this reaction to earnings. So now we're still bearish, and we're looking down at the lowest price we've seen of 438, and we're looking down from there at 413 after that. So bears in control of CHK and follow through to the downside. So I appreciate you watching. I'll see you all again on Wednesday. Have a wonderful next 4 days.